Hello, hello. All right, people, let's get going. We're live today. What's up, everybody? Welcome in, welcome in. Good to see you. Say hello in the chat if you can. Um, I love seeing people network in the chat, typing in what they're doing, what fun they're doing, all that kind of stuff. So welcome in. We're gonna get started on our 3-day Launch Your Fund challenge. This is gonna be very fun. The next 3 days, we're gonna dive into as much as we can get into around. A lot of you are here to figure out if a fund is right for you, or maybe you've already got a great fund idea. How do we scale that? Or maybe you already have an existing fund. How do I just go to the next level? We're going to talk about all three pieces of that category as we dive into this 3-day Launch Your Fund challenge. It's going to be so fun. So in the chat for me, again, one more time, just type in what type of fund you are doing. So if you're doing a real estate fund, hedge fund, crypto fund, debt fund, or what fund idea you have, give me one sentence actually. Type it out for me a little bit more. Give me a little more detail if you can. I'm just curious what type of people we have on the call today. So type that in the chat for me. Give me a little bit about what you're doing. So metaverse, hedge funds, futures funds, real estate, ecotourism fund. Very cool. I love it, y'all. Okay, yeah, give me one sentence in there. By the way, as we get going, just as little housekeeping notes, we're gonna go fast. I'm gonna have sections where I'm gonna pull up the Q&A and answer questions. At other times, though, I'm just gonna get going because I think a lot of the questions, I already see questions coming in. I'm gonna hopefully answer a lot of the questions around how do I raise capital? What licenses do I need? How do I structure a fund? How do I build a fund that investors are dying to have? That's what we're going to talk about. So hopefully I can answer a lot of questions as we go. So I'll have different sections where we have time to answer questions. We can go live. My VIP members, we're going to have times where we're going to have VIP sessions where we're going to do specific Q&As for y'all. So look out for that as well. It should be pretty good. Now, if anybody, actually by way of just the chat, we're going to let people join for probably 1 or 2 more minutes, and then we're going to get rolling here. So actually, let's do this. How many of you, like, this is your first time coming on a call with me? If it's your first time, type a 1 in the chat. If it's your second, type a 2. Or if it's your 5th time, type a 5. If it's your 100th time, type 100. Okay. So we've done a lot of these calls, but I'm just curious how many times, like, if this is your first time, 1, 2, kind of give me a sense of where you're at. And okay, wow, a lot of people your first time. Infinity. Yeah, such a, he's got an infinity sign there. It's awesome. The couple of you guys have been with me since birth. I know. So hundreds of calls. I love it. But a lot of people your first time. Okay. Well, for y'all, that's your first time. Welcome to the Fund Launch family, Fund Launch community. If you haven't been to these calls before, we generally structure these a little bit different than other maybe finance calls you've been on. Number one, we like to have a lot of fun. So I will do giveaways, we'll do other fun stuff just to keep it somewhat entertaining. Finance can be somewhat of a boring topic. So I'm going to try to keep it fun. We'll keep it light. We'll crack jokes. We'll have a good time. Number two, okay, we're not going to have any, I don't know, link drops and spamming the chat. If you do that, my team will just kick you out of the call and you're kicked out. So it's tough. We want to be a family here. We want to help one another. We're going to do, so we've done in the past, sometimes breakout sessions or other things where you guys can meet and help one another. We call ourselves the Wall Street Rebels, and for a reason, we call it like the Fund Launch family. So that's what we're doing here. If you're not involved, don't want to participate that way, we'll just kick you out and we'll all have a good time in here. Okay, does that sound good? And then number three, the third thing, I generally ask for a lot of participation. And I do that for a couple of reasons. Number one, it just keeps people more engaged. But really, the real reason is psychologists tell us if you show up to a call like this and we're talking about launching your fund and stuff, and you just listen for 3 days, you will remember about 0% long term. If you use if you take notes, you remember about 4 to 6% of what's shared long term. However, if you use your body, your voice, if you're engaged, you remember 12 to 15% long term. So I'm going to do stuff where I ask you to drop things in the chat, and you might say this is annoying or boring. I usually do it more for you, that you will get more out of this. I'm going to invite you to hopefully get in a spot where you guys can lock in, you can take notes, right? This is a challenge over 3 days. We're going to try to, as much as we can, build your fund and build the pieces of your fund over the next 3 days. All right. So once we get rolling, we're going to go fast and really get into this. That sound good? Give me a yes in the chat if that sounds good. So that's the plan. That's how we're going to approach this. Now, people that are on YouTube or I know we're streaming this other places. We're only going to stream day 1 other places. Day 2 and day 3, you've got to join. So hit that link below to register to make sure you guys are in. I love the yeses. Actually, you know what? My team's telling me we should do a giveaway. So I'm going to do a giveaway. Again, I mentioned we're going to have fun. And then I think people are hopped on. If they're not here yet, we're just going to dive in and go. This is how we're going to do this giveaway. You ready? So now before I do, we're going to give away $100 to Amazon just for fun, for the heck of it. Why not? because we're all here just having fun, talking about funds. First off, if you win the giveaway, DM my team privately, one of my panelists, your email, and make sure they have it. And we'll make sure you get to you the $100. If not, just take down my email, bridger@fundlaunch.com, message me and my team. We'll make sure the $100 is given to you, okay? We've had a few people in the past win, and then they didn't have it. So, all right, how we're gonna do this giveaway though, the first person to type in this word wins the money. All right, so that's it. It's the chat is the public ledger, okay? First person to type it in gets it. We're all gonna see it live, like a blockchain, almost public ledger, all right? $100 to Amazon. You guys ready? Get your keyboards ready. So, and then once we do this, we're going to actually go really fast and just dive in. All right. The word, actually, it's going to be a couple words. Okay. So, you ready? Everyone ready? Got the keyboards out. Type in, okay. And before I go, it's got to be spelled correctly. I do not care about capitalization, but it's got to be spelled correctly. You can't just jumble on your keyboard. All right. The phrase is, let's get started. Okay, let's get started. First person type in, let's get started in the chat wins. Wow, it's very fast. Holy crap, you guys are very fast. We got people are active today. Look at this. All right, I love it. All right, first person at the top of the chat. Everyone can see it. So send us your email to my panelist team, and we will send you $100 to Amazon. There you go. We're gonna do more of these giveaways. You got to be sharp. All right, you got to be sharp on here. So first person that got it, congrats. And I think it's spelled correctly here. Good. Send us your email, and we'll get going. All right. Again, like I said, we like to have fun on these calls, so welcome in, y'all. Okay, let's get going. So I'm going to share my screen here. Let me know if it's working. Let's see. I'm going to share that. Boom. I think it's popping up. Again, we're going to roll. We're going to have a lot of fun today. By the way, if things are breaking or whatever, we're doing this live. So just let me know, if things aren't, audio cuts out, whatever, we're doing this all together. So what I want to share is very specific things that are going on in the world right now. You guys ready to get going? I think we just dive in. 3-day challenge. I want to first start out around what we are doing and what we're experiencing as humans right now. And we live in a pretty interesting world. I did some study around emerging fund managers, people like you that are launching funds. So if you look right here, emerging fund managers actually perform extremely well. There's a ton of studies on this. Emerging fund managers, meaning funds less than $1 billion, actually tend to outperform larger funds, which is pretty significant, pretty crazy, actually, on a percentage return basis. And a few reasons for this. Emerging managers can have more attention to investments on fewer investments, and they have usually smaller, more inefficient markets. It is a lot easier to generate a 20% return with $15 million than it is with $15 billion. Because again, emerging fund managers have more attention to detail and actually can focus on fewer investments and find inefficiencies in markets. Once you hit there's a kind of interesting market, $1 billion fund that they still do well, but it's just harder to achieve those same returns. Does that make sense? It's pretty cool. There's a pretty cool gap for emerging fund managers, what we are doing. Now, what we've done with Fund Launch has been amazing. We've had over 210 funds we've launched the last 2 years out of Fund Launch, out of our Black Card group specifically, that have done incredible things. I think we have over 15 student funds over $100 million out of our group. We have 54 funds over $10 million out of our group. It's very cool to see what y'all are doing in our Wall Street Rebel community. So congrats to you guys for what we have done. Now, additionally, I want to make sure this is I think it's very pertinent to our day right now, what we were talking about. We are seeing some pretty interesting advancements in the world where people like us, emerging fund managers, can do a lot of stuff. Right now, we are seeing huge changes on macro events. For example, southern border, we are seeing over 300,000 people a month come across the southern border. I mean, which is a significant thing for political, social, but also markets. I mean, that's a lot of people. We are seeing mass human migration happening around the globe. This drastically affects what you and I are doing every single day. So we're going to talk about this kind of stuff for the next few days. We have the Biden versus Trump rematch. Hey, yo, Bridger, you're talking about political things. I know, because guess what? It matters. Like, most people don't want to talk about this stuff. Like, it matters who gets elected. By the way, this is going to be insane. I had one wish. I spoke on stage last year at Fun Launch Live, and my one wish was just, please, let's not have a Biden-Trump rematch. Apparently, we searched the whole planet, at least the country, and we could not find two better people than Biden and Trump. This is apparently the top of what we've got in America right here. Two, 70-year-old dudes that, anyways, have a lot of problems on both sides. And actually, I'm going to do this real quick. Let me stop sharing my screen. I'm going to reshare. Anybody know Shane Gillis? He put out some awesome content on the Biden-Trump rematch. I'm gonna play this video. Let me know if it's working for y'all. From Shane. He does the best Trump impression ever. We'll roll this clip. Here we go.
Probably one of the greatest speeches of world leaders given.
Restart. Hold on.
Trump gave what I think was probably one of the greatest speeches of world leaders given. You know, it's got to be up there with like Churchill, Gettysburg Address. It's the night the United States killed the leader of ISIS. Trump comes out of the Situation Room at like midnight, like he gives a press conference, like he's giving a post-game NBA, and just goes, Abu Bakr al-Baghdadi is dead. He died like a dog. And I didn't change one word of that. That's what he opened with. And then he did 40 minutes. The speech is 40 minutes. The meanest shit talk you've ever heard in front of the whole world. Abu. We could hear him crying. I said, Abu, don't cry. Let me tell you something. Abu cried. He cried quite a bit. I wouldn't have cried. Crybaby Baghdadi. That's what we were all calling it.
Okay, so there's Shane Gillis talking about Trump. That if you haven't seen that clip, it's amazing. Now, you Biden fans out there, we got one for you as well. But we have the Biden-Trump rematch, which is just insane that this is happening. It's just insane. It's crazy that we're back. We are back to a Biden-Trump rematch. Now this one's about Biden. I thought this was pretty funny. We'll roll this clip. Here we go.
My favorite thing about Biden is anytime Biden finishes a speech, he transforms into a Roomba.
Oh, there you have it. Okay, so I had to play those. I love those clips, dude. Shane Gillis crushes it on those. So we have the Biden-Trump rematch. How is that going to affect markets, our funds? We're going to talk about it over the next 3 days. What this all means for what we're doing. We have huge advances in AI and robotics. You guys see that new video from Boston Dynamics, that robot that stands up? Anyways, very interesting what's going on. We have Optimus. This is, again, drastically affecting your markets and what you guys are doing every single day. We have blockchain and crypto. I run a crypto hedge fund. We manage about 25 million roughly right now. Huge advances in blockchain right now, and anyways, the digitization of money, central bank digital currency. We can talk about this over the next 3 days as well, how it's going to affect and change your portfolio and markets of what's going on. We have Israel and Ukraine wars. We have massive global conflicts that are going on right now across the globe. And actually, I don't know if you guys saw this. Maybe this is like breaking news. I heard. Do you guys hear Chicago City Council got together? This is a centuries long conflict that's gone on in, specifically Israel, Gaza, the Middle East, right? But the Chicago City Council, as we know, they're obviously very involved with, the Middle East, very, very deep ties between Chicago and, the Middle East. They got together and made a resolution for a ceasefire in Gaza. So, I mean, over all the stuff it's probably a matter of days because no one dares go against the Chicago City Council. They pretty much solved this world conflict, I think. And I had a meeting. They had a meeting. They signed a ceasefire in Gaza, and I think it's going to work. So good. Kudos to the Chicago City Council for really solving this global conflict. Very cool what they did. As well, currently we have an economic collapse going on in China. We had Peter Zeihan speak at our event at Fund Launch Live. He talked all through this. We are seeing a huge economic collapse in China. Goldman Sachs put out a report just barely. Every single major public developer of real estate in China is currently in default. Every single one of them they can find. China's youth unemployment is so high, they stopped reporting the number. China's last census, they came back and they've overcounted their population by 100 million people, which is insane. Okay, this is, we can talk about this in the Q&A sessions as well, but this is a massive macro event that's going on right now. It's kind of, they're calling it a train wreck in slow motion. High interest rates in the United States have caused a huge squeeze in China, which is pretty interesting. And by the way, I have no jokes on China. I don't want to be canceled by Xi Jinping or whatever. So no jokes on China as we go forward, okay? Inflation versus the dollar. What if I told you as well, the dollar over the last 3 years, this is the DXY, okay? The DXY tracks the dollar versus other currencies. The dollar is up right here, 13% as of, this is March 31st, so a little bit out of date here. It's still gone up. You can go look at the DXY right now. It's up over 13% in the last 3 years. Okay. This is very interesting macro things. Who would have guessed? We print all this money and the dollar is up 13% compared to other currencies. Most people think the US, we live in this, man, we have inflation, things are bad. We never look outside the world. Other countries are doing just as bad. They're having tons of inflation problems as well. So anyways, here we are with the DXY, which is pretty crazy. So now I want to tease, kind of tease this. We're going to dive into a lot of stuff around funds. Obviously, you're probably like, Bridger, why are we talking about this? Like, this is the 3-day Launch Your Fund Challenge. And in just a second, we're going to dive into what I call the mega framework. Okay, this is the fund launch formula. This is actually what we're going to use as a framework over the next 3 days. Each one of these pieces is individual frameworks on how you go out and build your funds. We're going to get this in just a few minutes, but I wanted to set the groundwork around what we are doing as fund managers, why this is so important, like right now. There are 3 companies that are taking over the world right now. Vanguard, State Street, and BlackRock. Combined, have roughly 40% of shareholder vote. $22 trillion they manage, which is insane. Okay. They manage, I think this next slide, if you look at here, Apple, Microsoft, Alphabet, every company, I think it's like 493 of the Fortune 500. They are the top 2 shareholders. Vanguard, BlackRock. You can see that these are the shareholder percentages right here on the right over here. Pretty wild. If you're wondering, like, how did like all these companies get in? Like, remember ESG came out? So ESG, which is environmental social governance, came out, and like all the companies just signed up immediately. And they're like, oh yeah, like all these Fortune 500 companies, like, yeah, we're all into ESG all of a sudden. Like, how did they do that? How did everyone just hop on board? And you're like, oh, well, maybe it's because their 2 largest shareholders, Vanguard and BlackRock, told these CEOs, hey, we need you to push an ESG agenda. And if you don't, we're going to have to divest your stock. And the job of a CEO is to provide shareholder value, right? And so if your 2 biggest shareholders are telling you to do something, you're probably going to do it. Doesn't that the world starts to make sense a little bit when you tie back who's the largest shareholders of all these Fortune 500 companies. Now, additionally, what's interesting about this is BlackRock came out last year. Larry Fink had said, hey, ESG was kind of a mistake. It had good intentions, but it wasn't executing the right way. And they've actually gone away from ESG. But it's interesting about only a handful of companies kind of control the whole world, which is pretty wild. Now, you people, where's my real estate people? If you're in real estate, type it in the chat or whatever. And by the way, if people are dropping links in the chat and stuff, we're going to kick you guys out. Just so I said this earlier, but no spam in the chat. And we'll kick you guys, and my team will be on the back end. But any of my real estate people, type in real estate in the chat if you guys are my real estate people. Same thing's happening in real estate right now. In 2021, 1 in 7 homes were purchased by Wall Street in 2021. 2022 is roughly 1 in 5. 2023, they actually didn't publish the full number. They're estimating, though, it's around 1 in 3. 1 in 3 homes purchased by big funds on Wall Street, which is insane. Okay. The world is being consolidated right now. We are seeing mass consolidation around the world. These are industries that have already been consolidated. Number 1, TV and news, food and food production, accounting, like you ever heard of the big 4 accounting firms? The reason there's a big 4 accounting firms is because all the other firms got rolled up. They all got bought. Other industries starting to consolidate. Car washes, Amazon sellers, dentists. You guys heard of DSOs? They're buying dozens or hundreds of dental practices and rolling them together. Food franchises, chiropractic, real estate, social media accounts. We are seeing funds buying up social media accounts. And the account looks the same. They have like 30 accounts that control 20 to 30 million followers, but they all look different, but they're all actually controlled by one group. Isn't that kind of freaky? This is this world of consolidation that we are seeing right now, and it is happening at a fast pace. If we don't wake up and smell what's going on right now, I'm literally talking to you right now on this webinar. If we don't realize that what's happening, we might end up living in a world like Wall-E, where there's like 1 or 2 companies that control everything. Okay. This is an interesting video. I'm going to play this video, give you a sense of, you might be sitting there like, no, it's not consolidated. Everything's independent. Well, this is an interesting video. This came out during COVID around TV and TV stations and networks. Again, we think we're taught all these different TV stations. They're actually all controlled by the same people. I'll roll this video. You guys can see.
The sharing of biased and false news has become all too common on social media. More alarming, some media outlets publish these same fake stories without checking facts first.
The sharing of biased and false
news has become all too common on social media.
More alarming, some media outlets publish these simply aren't true without checking facts first.
Unfortunately, some members of the media use their platforms to push their own personal bias and agenda to control exactly what people think. And this is extremely dangerous to our democracy.
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 Isn't that kind of freaky? This video came out before AI, by the way, at least in that sense. You can go look it up. This is on YouTube. Pretty scary. All these news stations that you think are independent are all saying the exact same thing. If you look at actually who owns the media giants, bam, right here. We only have a handful of companies that pretty much own every TV network that me and you watch in the world. Right here. Bam, these are the media giants. Here's a better look at them. Disney actually bought 21st Century Fox. There's really 5 media giants that pretty much own every channel that me and you watch. Interesting. Again, we are living in this world where things are being consolidated. What about food? I think we shop at all these different brands. There's only a handful of brands that really control every single food that me and you consume. Kind of scary. I'm going to go fast through this. Car companies. There's really only 14 car companies that control pretty much the entire world. I'll zoom in a little bit so you guys can see this. The top, you say FCA owns Fiat, Maserati, Chrysler, Ram, Dodge, Jeep. They're all owned by the same company. Down below, Volkswagen. They own Lamborghini, Porsche, Bentley, Bugatti, Seat, Audi. Like they're all owned by the same company. So you're sitting there like, oh man, screw, I hate my Porsche. I'm going to go buy a Bentley. You're shopping from the same company, right? Actually, they share parts and stuff. It's pretty wild. But again, we're seeing this mass consolidation in here. So the big question is, like, Bridger, how do we play in this game? What does this mean for us? Me and you, actually have a very unique opportunity right now. And this is very interesting what's going on with retail investors. I'll share this graph. The retail investors, the Wall Street rebels, are actually starting to shift markets. So back in 2010, retail investors, me and you, roughly were 11% of the equities markets, okay? You see this graph on the right. By 2023, it's 25% equity markets. We, the consumers, are starting to shift markets in different ways. We are democratizing what is happening in the markets, which is pretty significant and very cool. I'll give you this chart on the right, it's kind of zoomed in there. You see the amount of retail investors, us, are moving markets right now. This is a very interesting graph. Okay, this is Disney versus the S&P 500. Actually, I was on stage at Fun Launch Live. I pulled this slide up. I said, hey, so Disney back in 2021 had an interesting thing. Their stock was doing extremely well, and they started to put out content that parents didn't agree with. And I was actually at Fun Launch Live, and I said this, and somebody booed on, like literally in the crowd, like boo. And I was like, oh, who booed? And everyone went quiet. And I was like, no, let's grab a mic. And I went off stage. I went into the audience, and there was a guy sitting there. I was like, hey, I saw you were booing. Why did you boo Disney? And I'm like, you're not going to be in trouble. Just tell me. Like, give me a mic. And we gave him a mic. He stood up and he said, well, where are you from? He said, I'm from, I can't remember where he's from, but he said, I go, how many kids do you have? He goes, I have 4 kids. And I go, okay, have you guys liked? He's like, yeah, I've loved Disney. Disney's been my guy for the last, 15 years. Well, why did you boo Disney? He goes, well, in 2021, they started to put out a lot of political content that we didn't feel like was good for our family. And so I'm like, well, what'd you do about it? Well, he goes, we stopped going to Disneyland. We canceled our Disney Plus subscription. And we were literally on a boycott of Disney. And the whole audience erupted and applauded this guy. And I was like, okay. And I'll go, well, let me tell you much. My parents are the same way. And me, like what if I told you 15 million people also canceled their Disney Plus subscriptions last year? 15 million people agreed with you that Disney was getting too political. If you look at this chart, Disney is 71% off of the S&P 500. They've lost $219 billion in market cap drop over the last few years. If you're talking about I don't care if you're pro-Trump or pro-Biden or pro-guns or anti-guns. I don't care what you stand politically. I just don't want it in my kids' movies, right? I just don't want, let's just watch Incredibles just to watch Incredibles. Let's not put all these political agendas. And I think a lot of parents agree with that message. And you've seen how retail investors back here have moved this market like crazy. And now Wall Street has to pay attention to what we, the people, are doing. That's why I believe we need more people to launch funds. You might be sitting there like, bro, Bridger, aren't you part of the problem? I'm the fund guy. I teach people online how funds are built. I run 2 investment funds right now. This is where I stand. I'm okay. I believe in capitalism. I love capitalism. I believe it produces some of the best results ever out of a country. I'm not okay with 3 companies that control everything. I am okay with 10,000 funds that independently fight and compete and create a competitive market that drive prices down for a consumer. I love that model. I'm not okay with 3 companies that control the whole world. Does that make sense? Give me an oorah if that makes a little bit of sense in the chat, okay? That's why, literally, if you're asking, like, Bridger, why are you doing these webinars? Why do you do events? Because I believe if more people do not learn about funds, people like me and you, do not learn about this game of funds, about what's going on, we may be slaves to a handful of companies that take over the entire world. It actually is crucial to me, my life. The funds that you launch and do will directly affect my life, and the funds that I run will affect your life as well. That's why I believe this is so important. Our mission at Fund Launch is to democratize Wall Street, to make high finance available to all, to make this specialized secret information that only the elites used to know available to everybody like me and you. That's the mission we're on. That's why we throw events. I make plenty of money running my funds. I don't need to host a webinar and do all this roo-rah. I do it because I think we're in a crucial time in history that we need more people to understand this game. Yeah, we could go boycott or get mad. Honestly, boycotts, in my opinion, don't really work. Protests have kind of lost their luster. There's a protest every single day. What we need to do is use the same tools that Wall Street use and beat them at their own game. That's what we need to do. That's why it's so crucial what you're doing today. You're on this call right now. It's crucial not just for you, but it's crucial for me that you're here. It's crucial for your kids, your grandkids. Like, think of the bigger game that is going on. That is what's happening here. So I know we're going to have fun. We're going to talk about stuff, but that's why I believe we need more people to launch funds. Okay. Now, Bridger, and that's why we call ourselves the Wall Street Rebels. Okay. That's why we have this brand, this mission, this following, and by the way, it's not my group. It is our group. This is what we are doing together. This is what is happening here. And actually, you know what? Let's do this. Let's do a giveaway. First person to type in the chat, Wall Street Rebels. Wall Street Rebels gets $100 Amazon. You guys, that was a quick one. I didn't even tee you up there. First one to type Wall Street Rebels. You gotta type it just like it's written on the screen there. Wall Street Rebels gets $100. Wall Street Rebels. That was, yeah, I got you off guard there. Okay. First one to type Wall Street Rebels gets $100. Let's pull it open here. Wow, you guys are fast. Okay. My team, if you're the top person on the ledger, just send my team an email with your email. It's got to be written just like it's written there. I don't care about capitalization, but Wall Street Rebels. We'll send you $100 to Amazon. It is a typing class. Someone's asking, yes, this is a typing class. Making sure you guys got fast fingers. That's why we're the Wall Street Rebels. That's why we do this. That's why we go out and spend all this time running ads and all this stuff, because I believe we need more people to do this. Now, Bridger, how do we play in this game? Like, we're just regular people. Like, how do we do this? Well, a couple interesting things. Number one, knowledge is what? Knowledge is power. Knowledge is, and I love the quote, knowledge is potential power. Knowledge is potential power. When you learn the stuff, it is potential power. When it's applied, it becomes power. I want to give you over the next 3 days a ton of knowledge about funds, how funds are built, how they're put together. Additionally, we have a unique spot in history for where we're at. We are seeing some pretty macro cool things. Dry powder grows. So what dry powder is this is the amount of that huge funds have not deployed yet. Okay, this is private markets have over, let's see, dry powder reserves have totaled to $3.7 trillion. This is capital that needs to be deployed right now that has not been deployed yet from private managers, which is a huge amount. That is a lot of capital on the sidelines waiting to be deployed, which is huge opportunities for people like me and you to come in and find good deals and either partner with big funds or whatever to deploy this capital. The second piece, we are seeing a massive baby boomer wealth transfer right now. This is from Forbes. The silent generation, which is the parents of boomers, which you never hear about, by the way. I only hear about boomers, maybe because they're silent. Oh, ding, there's my joke for the day. All right, so keeping you guys sharp here. So the silent generation, which we never hear about because they're so quiet. The parents of boomers And boomers, so these two groups together will pass down $84 trillion in assets through 2045. Wow. With 72 trillion going directly to heirs, according to the financial analyst markets. So pretty wild. And we have tens of, it's hard to think about trillion's a weird number to think about. That's a lot. That's just, even billion is a lot of money. I mean, you could give away, I think it's $86,000 a day, every single day. Imagine doing that every day for 31 years. And you wouldn't run out of money yet. That's $1 billion, 1 billion. Now think about a trillion. I mean, it's crazy how much money that is that's being passed down. There are a lot of anybody in the chat doing baby boomer buyouts. There's a lot of businesses right now that people are buying these old baby boomer businesses, like an old accounting firm, an old print shop, whatever these people, they want to retire and they will sell you their business, even do seller financing to your business for very cheap. And because they want a new, younger entrepreneur to come take over their business and do there. We are seeing massive rolling of baby boomer wealth transfer, which is very cool. I know a lot of you guys in the chat are doing that right now. So there's a lot of opportunity right now between those two things and other macro events we're going to talk about. Now, I didn't mention this. I want to mention this briefly. You might be like, who the heck is Bridger? Why are you even talking to us? Okay. So I'm not on here to talk about myself, but let me give you just a little background on me. So I started Blackbridge Holdings. I ran 2 funds there. Our first fund got a 64% return to investors. That's cash on cash return. We did 219 deals over 3 years and actually sold that fund. We had a competitor come and buy that fund out. We had a great exit on that. Went really well. Additionally, I'm a co-founder of Fund Launch. We have 70,000 students. We've done over 25 million in revenue. Bootstrap company. We've launched 210 funds. Fund Launch is a company that launches funds with people. So we have courses. We have a full group called Black Card. We work with you. We have 15 coaches that work with you hand in hand. We have all the way down to our Academy program. And then we even have free courses as well that just teach people about funds. We do webinars like this, live events to help people learn more about funds. Currently as well, I run Ugly Unicorn. It's a crypto hedge fund. We manage about $25 million in equity. We had a 60% net rate of return in 2023 to our investors, which is pretty awesome. We had an incredible year last year. And then Fund Launch Partners, we just launched this is the GP Stakes Fund. We're raising $50 million for this. This is where we can actually partner and invest into funds like you guys that come out of Fund Launch. We're investing in emerging fund managers, which is very cool. So that's what I'm doing. That's what I'm involved in. I think it's important to know that I have done this. I've ran now 4 investment funds. I've partnered on 8 different funds. We've helped 210 people launch funds. We've seen a lot of funds come through this game. Additionally, if you're wondering, this is a picture of me and Mason, my co-founder with Fund Launch. The story of how I got into this, I won't tell you the whole story. My dad co-founded a deca-billion-dollar family of funds. I did not know he was wealthy until I got into college. I come to find out he's managing tens of billions of dollars. Top 5 real estate fund in the world, which is crazy. My brother is also an investment funds attorney. He was formerly at the largest law firm in the world for private funds. He charged, I don't know, $1,500 an hour or something like that to have legal docs done. And he did that. He was formerly chief compliance officer for a $600 million fund as well. And he just stepped away, now is launching his own fund as well. So between my dad, my brother, and myself, we have a lot of background in funds. None of us went to Harvard. None of us went to Ivy League schools. We are all entrepreneurs that figured out this incredible game of investment funds, the game of private equity, hedge funds, venture capital, real estate funds, this incredible world. And we started to make content together. It's done decently well. We have a pretty good following online. We put out a lot of videos on funds. And as you guys can tell here today, we were talking all about funds. So I want to give you a little background on what just I'm doing, where we're at, and why I have authority to talk in this space. So you guys ready to keep going? Ooh, okay, there's a lot of talking. Take a breath here. Give me a type of yes in the chat here. If you guys are ready to get going. We're going to dive into a lot of content. You know, people come on to calls like this and there's a lot of hype and motivation and stuff. I just want to get into the meat. Let's just dive in because you guys are here to learn. You're here to make money, start businesses. Let's get going. I love the yeses. All right, let's get going. So how this event is designed and planned. We have helped now hundreds of people launch their own funds. And so what we found was there's these common frameworks that were used to launch funds. And there's this same pattern that people used over and over again. I started to interview successful multi-billion-dollar fund managers. I bring them on my podcast or show it right in here. We'd sit across the table. And what's interesting is they all use this same pattern. And we finally started to formalize this into frameworks. And I'm a big believer in frameworks. I believe the best teachers throughout history, whether it's Tony Robbins or Jesus or Buddha, or whoever the person was, they taught through frameworks. Frameworks are incredible because they work throughout every situation. They work across time and across countries. And so we've started to think through what are frameworks to build funds. And this overarching framework is what we call the fund launch formula. It's a 4-step formula that we've used to launch people's funds. And so this is why I love frameworks. And let me share. These are some of the frameworks. Sorry, let me go back here. We'll talk through this, but some of the frameworks that we're going to talk about over the next couple of days. Okay. This is a framework for the fund launch formula, how we go out and actually launch funds through a pattern of what we're doing. These are other sub frameworks. How do you actually find partners? What partners do you need in a fund? The 3 stages of raising capital. We'll talk about this, and actually the sub frameworks below them, how you work your way into a room, how you connect the room, and how you close a room. Okay. The capital raising matrix between high net worth individuals, family offices, institutions. We're going to talk about international feeder fund structure. This is how international funds are built. This is how syndications versus funds work, okay? A syndication model versus a fund model. We're going to talk about how this works on, again, syndicating to funds from your first business, next business. Your fund launch checklist between legal, marketing partners, and service providers. We're going to talk about what licenses you might need for a fund. If you're an investment advisor, registered investment advisor, depending if you're in the United States, this will go there. How to build your edge in your fund. What this means to build a strategic edge for your fund. How you actually go risk, control, return. How do you find if you have alpha in your fund? We're going to talk about different Reg D fund types, 506Bs, 506Cs, non-accredited investor funds. Can I raise from a Reg A or Reg CF fund? Different types of investors per the SEC, okay? We're going to talk about GP-LP structure. We're going to talk about waterfall structure. We're going to talk about the fund waffle and actually what roles you need inside of your fund, okay? I know I'm going fast, but slow down. We're going to talk about all these over the next 3 days. Okay. So get your pen and paper out. This is how we're going to get into this. We're going to go fast and we're going to dive in. Now, what we found was funny. We use this framework, the fund launch formula, step 1, 2, 3, and 4. We'll talk about what this is in a second. But we found as well as all these frameworks fit in to what I call now the mega framework. Each one of these processes have different frameworks associated with them. So if it's around like step 1, finding a deal, or 2, framing a deal out, or 3, raising capital, or 4, launching and doing the legal process, there's frameworks for to how to go about this. So that's what we're going to dive in and talk about today. Okay. You guys cool if we get going? Okay. This gives you hopefully an overview of what we're going to do the next 3 days. So you guys need to follow, get in here. We're going to start tomorrow. The next day, we're going to dive into all these frameworks and hopefully apply them to your life. I'd invite you to get, a pen and paper out. You can start drawing stuff and start putting in what you are thinking of doing into these frameworks. And what happens is it'll give you a lot of closure on what to do and how to do it. Okay. It makes me so excited to dive into all this. All right. So on that note, let's dive in. You guys ready? Okay. So I'm going to actually stop sharing my screen here. And we're going to do this. Let's do, I'm going to go to my iPad. Let's just start drawing this out. You guys cool? This is the 3-day Launch Your Fund Challenge. So let's just get rolling. So I'm going to plug this in. Let me know if it's working here. Try sharing my iPad now. Say a little prayer. It all works here. Ta-da. Okay. So here we are. So now I can draw on it, make all this cool stuff. So, kind of cool, you guys, for our AV team. We're stepping up our game here over in the studio. All right. So let's look here. So, and you can put my face in the corner if you want, but let's talk about the fund launch formula. Actually, I'm going to go up here and I'll just draw it out for you guys. So what was funny is I started to interview probably hundreds of fund managers. I've talked to them, and I love to ask them the process of how they launched a fund. What's so interesting is that when I talk to them, if you go on a blog or whatever, you look online, a blog will tell you, if you go literally right now and Google, how to launch a fund, a blog will tell you this. Okay, step 1, go hire a lawyer. Step 2, go pitch investors. Sorry, I'm writing fast here. Pitch investors, and you hope to raise money. And if you don't, well, shoot, sorry, tough. A lawyer is going to be $30,000 to $50,000 to do. Tough. Hopefully you raise money. If you don't, funds are very hard to start, and you can't really do this. Again, that's what these blogs will say. Well, guess what? These blog writers have never launched their own fund. They write blogs for a living, for crying out loud, okay? So you can switch me back and forth if you want. It freaking makes me just go crazy, okay? So when you actually talk to real fund managers and what they are doing, they actually do almost the exact opposite. And what we found was this pattern. We finally coined it into what we call the fund launch formula. What we found was when you type this out in these 4 steps, 1, 2, 3, and 4, hiring a lawyer was actually the last step. Your lawyer right here. Ta-da. That's actually step 4. Anybody can go hire a lawyer. Anybody can go, pay some money for someone to build legal docs. The bigger question is this: can you build a fund that investors want? That's a bigger question. It's kind of like anybody can build a website, right? Anybody can build. You can go on Wix and build a website in 20 minutes. But can you build a website that people will love and come buy products from you and like love what you've built, if that makes any sense? Okay. That's the big question here. Can you build a fund that investors want? So going back to how do we do this then? When I interviewed these fund managers, what they said was step number 1 was they went through, you can go back to my screen here, is step number 1, they went out and they found, and I'll put it in quotes here, incredible deals. We'll talk through what this means in a minute. But incredible deals or incredible thesis. And they stress tested their thesis. We'll talk about how to do that in a minute, but they stress tested their thesis. And type in, actually in the chat, type in how, what kind of theses you guys have. I'm curious what people are doing in here. What kind of thesis are you looking at right now for your fund? Type in the chat. Like literally, I want to see some people. And make sure it goes to, some of you guys are just chatting to me, which is fine behind the scenes. But if you want everyone to see it, type into everyone. But type in like as a thesis, what's your idea for your fund? Type it in the chat for me. By a thesis, I mean your idea for your fund. So, hey, I'm going to go buy, we're going to buy land in Florida and we're going to do a development project. And we believe if we develop certain units in a certain location, we can sell them for a greater profit, right? We're going to wholesale real estate. We're going to do affordable housing. We're going to do, okay, that kind of makes sense. What's my thesis? What's my plan for okay, we're going to go, and I know you guys are going quick on here. You probably have a full vetted out thing, but we're going to stress this out. So back to my iPad. For example, I'll actually walk you through this case study of like Ugly Unicorn, which is my crypto fund. We had an idea for, I'll give you probably the whole story tomorrow, but this is a blockchain or crypto fund. There's a lot of crypto funds. So why is ours unique? We test our thesis out. We ran test portfolios. We then went to stage 2, which is, and actually I'm going to just scroll down here. This will be a little bit easier to see. Let's do this. Ta-da, here we go. So we then went to step 2. So we had our thesis or idea. We then went to step 2 and we framed the fund out, how the fund would be built, how we're going to pay investors, how things will be structured. We drive all this down into a PowerPoint. And so we put this all together into a PowerPoint, and then and only then we go and we actually pitch investors. Now, Bridger, hold on, wait, I don't have my legal docs done. How am I supposed to go pitch investors, right? Like that doesn't make sense. Like, hold on one second. Let me give you an example. Again, the idea is we want to build a fund that investors are dying to have. We want to build a very good product. So what we do, and this is what I saw hundreds of fund managers do. They had a great idea for a fund. They framed how the fund we built, and they actually said, they called up one of their mentors and said, hey, Joe, we've been friends for years. I'm thinking about doing a fund. Hey, do you have 11 minutes where I could run this fund by you? And I just want to get feedback, poke holes in it. Do you have 11 minutes? I'll hop on Zoom. I promise I'll be prepared. Like, give me 11 minutes. And most people, if there's someone in your space, say, yeah, all right, you got 11 minutes. What happens is you're going to hop on this call and you're going to pitch them your fund. And they're going to give you some feedback. And they might just say, this is actually usually what happens is they say, oh, that's great. Good job. And you go, no, really, like I'm launching this fund. Yeah, it sounds great. And you go, okay, well, if it sounds so great, we're still putting together. But once everything gets structured, done the legal, can I put you down for $100,000 investment? And then they go, well, shoot, I don't know if I can right now. I go, well, what would hold you back? And they go, well, I didn't like this part and this part and this part. And you go, oh, thank you. Okay. Then they start giving you the real feedback is what happens. Okay. Then you get the real feedback when you actually ask for money. And you go, okay, well, thank you for the feedback. I'm going to go back. And what happens is you're going to go back to step 1 and step 2. And you're going to restructure your fund a little bit. Say, you know what? We should have a stronger team over here. We should build a board of advisors. We should, change up how we're going to structure this. And what happens is you iterate on this process. You go back to step 1, you come back to step 3, and you keep, and then you say, hey, okay, I'm going to come back next week and can I pitch you again? Or you find a different mentor that you can pitch. What we've seen people do is they go through this process maybe 7 or 8 times. And they pitch different mentors. They get feedback until they do this enough times where they say, hey, can I put you down for a $100,000 investment? And they say, you know what? Actually, this is pretty good. Yeah, count me in. Like, this sounds awesome. I would love to be a part of this. And you go, great. Sounds good. Give us a few weeks. We're going to get legal set up. But yeah, we'll come back and we're going to get that out. Again, this process makes a fund that investors are dying to have because you're building the fund with investors. Again, the opposite of what most people do is they do legal. They then pitch investors. They do legal and kind of the structure here. And they hope investors put money in. Our goal, like especially in Black Card, when we help people in Black Card, we want you at this point to get roughly $2 to $3 million in verbal commitments. Then and only then you go to legal. Then and only then. And guess what? When you go to legal, by the way, step 4, like I did my legal docs, because you know exactly what you want in your fund, you walk in and you go, hey, can you build XYZ with a drink and a side of fries for me? Boom. And they set it up, and it's actually very relatively inexpensive and fast. Most people, this is what most people do. Back to over here. Most people go to a lawyer. They call a lawyer today. Hey, lawyer. Oh, shoot. Legal. They call lawyers. Hey, I want to do a fund. And the lawyer says, great, let's set up a fund for you. Okay. So, Sarah, great. Let's have you in my office. Sarah, great. Do you want to do a Reg 506, Reg D 506B or 506C? Do you want to do an American or European waterfall? Do you want to do international feeder fund structure? What type of investors do you want to raise from? And you go, I don't know. And he goes, oh, well, no worries. I will teach you about this. And lawyers tend to talk very slow. And they're methodical. And they'll charge you $900 an hour to teach you about what a fund is. I had a good friend of mine. He did not follow the Funds formula. He went to legal first. The lawyer quoted him, yeah, it'll be, 30 grand to probably set up your fund legal. Okay, great. But then he went and pitched investors. An investor, he wanted to tweak his fund. He had different things he wanted to change. So they built the fund for him once, and then they came and they said, hey, can we change a few things? And the lawyer said, yeah, for sure we can change things, but we're going to bill you, $900 an hour. Okay, no worries. And then they went back again. They talked to more investors. And then they said, yo, can we tweak some more things? They changed some more things. They did this process over and over and over again. He told me they spent over $500,000 in legal docs on their first fund. Why? Because they kept iterating with lawyers. They did this formula backwards. Does that make sense? That's why this formula, when we talk to people that run scale funds, like, oh, this is like the way to do it. Like, this is the best way to go about launching and scaling your fund. Because you build a fund, again, that investors are dying to have. I keep erasing stuff here, dying to have. This ensures, and guess what? Guess what might happen, by the way? You might go through this process here of step 1, 2, 3, and 4. And you might start pitching investors, and they're not going to, your fund, they don't like your fund idea. And you do it again and again and again. And to be honest, it doesn't work out very well. That's okay. That's totally fine. I'll give you actually a real life example. You can go to full screen if you want. So Ugly Unicorn, I'll give you an example for my current $25 million hedge fund that we run right now is in blockchain. Originally, ugly unicorn was going to be in real estate. During COVID, we were going to buy big box malls. So COVID had shut down all these retail. We're going to go buy big box malls, and we were going to gut them and renovate them and put like a higher and better use for the malls. So some of them will be like self-storage, maybe office, like all this cool stuff in these malls. Not a bad idea. During COVID, malls are dead. We're like, there's probably some motivated sellers out there. That'd be pretty awesome. So we said, great, this is a cool idea. So we did step one, like the deal. We then went to step two. We framed the whole fund out. We then went and pitched investors, and investors hated it. And then we said, okay, let's tweak some things. We then pitched investors again. They hated it again. And we went back and forth. And maybe it was just during COVID, people were fearful. I'm not saying that's a bad idea. Just the investors we were pitching, we couldn't quite get the right team together. They kept saying, well, who's going to be? And I'm not a real estate guy. We had a team of real estate people, and they were like, is this the right team? Can they execute on this? People, they were all shaky. We ended up not launching that fund. And I'll tell you that live on this call, like I'm the fund guy. We did not launch that fund because we got to step 3 and it didn't work. And guess how much money we spent? $0. Vetting that out. We only wasted a little bit of time, and it gave us a lot of feedback. And then we said, well, and this is the way I structure. Maybe we'll talk about this in a second, your team. But I work as, maybe you actually go to my slides here. So if you come over here to the deals, on step 1, there's 3 roles in every fund. And this is actually very freeing as well. By the way, these can be done by one person. It's a little too zoomed in. Let's do this. One person or 20 people. But all 3 of these roles need to be done. This is the framework I have around the people you need in your fund. You have what I call your expert investor, or your CIO. This person is your chief investment officer. This person is amazing at real estate or crypto or hedge funds or Forex or whatever the thing is. Next up, this is your fund manager. This person is very, very good at compliance, legal, like all the structure of your fund, how the fund is actually put together. Okay, this person. And then finally, this is your money raiser, your capital raiser. This person is well connected, has connection. They're very good at finding investors, raising capital. Okay. Very few people do this alone. Very few people run funds by themselves, just so you're aware. So if you're sitting on this call today and you're like, I don't know if I can do a fund or not, it's not, I love the quote. It's not how, it's who. It's not how do I run a fund. It's who do I find that can help me run a fund. Okay. Now go back to my slides here. Again, my first fund, I did all of these, which actually probably was a mistake, but I did all of them. You can have like 2 people. You can have, like currently right now, Dan, my partner, he's our chief investment officer, Dan. Bridger, I'm very good at fund management. And then we both help raise capital together. This is Dan and Bridger. Okay. So you can mix these up. And eventually, once you get big, you'll probably just be a sliver. You'll be a slice of one of these, and you have 20 people on each team, right? But again, all 3 jobs need to get done. So actually in the chat for me, type in the chat which one you identify with. Which one are, like right now, which one do you feel like you identify with the most with? Expert investor, fund manager, type in like one of these 3, expert investor, fund manager, or money raiser. Which one do you identify with the most? Investor, CIO, money raiser, expert investor. Cool. Okay, a lot of people, different ones. Now, I'll just share this as well. If you go back to my screen, so I'm putting you back and forth. When we talk about this 3-day launch your fund challenge, I'm going to talk a lot about this, how to actually run a fund. And we're going to talk about raising capital. We're going to talk about these 2 buckets a lot. Expert investor, I'm going to give you more frameworks, but I'm not going to teach you what to invest in. All of you have different ways and different things you invest into, but I'm going to give you down below this framework of how to invest and actually how to find good deals. But just so you're aware, Bridger, I'm pretty darn good at fund management, and I'm a decent capital raiser. That's what we're going to talk about the most. Over the next 3 days, I'm not going to teach you how to invest. You can go to other places, other channels to look at that. Does that sound fair? Okay, just give you a sense. This is what we're at. So back to my story with Ugly Unicorn. I am a fund manager. So what I like to do is I like to partner with people that are very, very good expert investors. Does that make sense? So we tried this real estate deal over here. We went step 1, step 2, step 3. We couldn't figure out how to do it with the real estate team. So then I said, well, what if we did it with a crypto or blockchain team? CRYPTO. There we go. Crypto. And it took off. Investors loved it. We raised $10 million initial launch. Like, boom, this is June of 2022 during the crypto bear market, by the way. Crypto was like down bad. Everyone hated crypto. We raised $10 million in crypto. This is the process that we're going to walk you through of vetting your deals out. Hopefully right now you're already getting ideas of like, where's my deal at? How can I vet this out and do this? And by the way, you can do this process in a matter of weeks. And we're going to walk you through this over the next couple of days, but you can do this process of step 1, finding deals, 2, framing things out, and 3, raising capital probably over the next few weeks and figuring and vetting this out. But more importantly, I guess the point I'm driving home is this. The current idea that maybe you came to this call with of like, we could do this fund for, may or may not be a good fund idea. I don't know. The market will tell us if it's a good idea or not when you do this process. But more importantly, I think all of you, I hope I can get you committed to, I want to run a fund. I want to be a fund manager. In the sense that you just run funds. Not in, I don't care what role you are. And I know it's the same vernacular here, fund manager, that's specific to funds, but I want you to take on this identity of like, I'm committed to running a fund. And let me share a few reasons why. And I don't care if you're a CIO but I want you to be in the fund game. So you can go full screen if you want, but funds are the most incredible vehicle on earth. I'll give you a few points why. Forbes did a study on all the Forbes billionaires. Do you know the top group of where they came from? The highest majority of Forbes billionaires are from fund and investment management. Ta-da. Number 2 is, I think, fashion. Number 3 is tech, which is kind of crazy. Fund management. The Forbes 100 list is riddled with fund managers. It is insane how much fund managers make. This game, if you're, I talked about this. Let me go to my screen, actually. The fund managers, I'll walk through this, is the most I'm using this vernacular twice here. What I mean is just, maybe I should say running a fund. How about that? Running a fund is, I believe, the best vehicle in the world to create wealth. And again, what do I mean by vehicle? So vehicle is the vehicle, the thing you use to get from point A to point B. So back in my journey a little bit, I got into college. I knew I wanted to be an entrepreneur. I started 6 different businesses my first 2 years of college. I started a Chinese tutoring business. I wholesaled 2 houses. Like, I did all sorts of crazy stuff. And actually, I made a good amount of money. I built websites for people. I was trying all these different business vehicles. And finally, my dad grabbed me and said, Bridger, you're kind of like a chicken with your head cut off. Go meet with my business partner. This guy can really help you out. And I said, okay, I'll go meet with whoever. So to make a long story short, some of you guys have heard the story before, but I went and met with my dad's business partner. And again, I grew up in a normal household. You can make me full screen if you want. I lived in a normal household, and my dad drove a car with a dent in the door in 1999 Ford Expedition, just kind of in whatever. We weren't poor, but we were just a normal household. I go to my dad's business partner. This guy lives in a huge mansion, gorgeous, beautiful home. I go pull up to his house. I knock on the door. It's like amazing. I walk in his house. I finally sit down with him, and I ask him this question: how did you get all of this? Like, how did you do this? And he said, Bridger, I was a lot like you in my 20s. I started a handful of companies. He goes, I actually had moderate success running these companies. But then he goes, then I figured out the secrets of the ultra wealthy. The ultra wealthy families of the world. They send their kids to the best university. Sometimes they cheat to get them in. And they, want their kids to go into one of these spaces: hedge funds, private equity, venture capital, real estate funds. Or come back home and run the family office. And he goes, I met a guy that ran a private equity fund. He goes, I didn't even know what private equity meant. And he goes, but I should set a goal. I wanted to run a fund. I wanted to figure this game out, run a fund. And he goes, that's what we did. And at the time, they were managing over $8 billion of real estate, which is pretty crazy. And to make a long story short, I left this guy's house and said, hey, can you be my mentor? He said, go talk to your dad. Your dad knows way more about Syndication. I said, no, my dad's kind of broke. You're obviously super rich. Like, I want to learn from you. And he says, sorry to break it to you, but me and your dad make about the same amount of money. And my chin dropped to the floor. I was like, huh? Like, come again? He's like, yeah, me and your dad are pretty much equal business partners. And I left the dude's house. I drove straight to my dad's house. I was like, Dad, what the heck? Like, what's going on? Like, why haven't I been able to order a drink at Chipotle for the past 10 years because it's too expensive. We're only drinking water when we go out to restaurants. Like, and yet you're managing tens of billions of dollars in your fund. And he kind of laughed and, he said, yeah, I'm pretty conservative with my money and my partner kind of spends his money, but yeah, we run these huge funds. And anyways, long story short, my dad started teaching me about funds. Started to whiteboard out how funds are built, how they're put together. I ended up launching my first fund at 22 years old. I pitched my dad for money. My dad said no. He said this will be a crutch if I invest in your funds, and he till this day, actually, my dad has never invested in a single fund I've ever done. But he was a great mentor that helped me through the process. And you guys will probably be able to hear from my dad. If you come to our events, you'll hear from my dad. He's an incredible speaker. Give some love for John Pennington. I think his book is right here. He just dropped this book, Dollars, Gold, and Bitcoin. Amazing dude. Grew up in North Las Vegas and just awesome. I love my dad. He's an incredible dude and taught me about this game of funds and got me in this game. And so this amazing vehicle of funds. So if you go back to the whiteboard here, again, this vehicle, I got discovered because I was trying website building and wholesaling and other stuff. And then we started to talk about vehicles. Let me give you an analogy here. If me and you were in a 10-mile race and you train and I train and we're going to go on a foot race, who's going to win? Well, we're going to compete and we'll see who wins, right? But let's say in a 10-mile race, I had a bike and you were running. Even if I'm kind of fat and overweight, I didn't train that hard, I will still probably beat you in this race because I have a better vehicle than you. Again, and let's say we're doing a 10-mile race, but you have a bike and I have a car. It doesn't matter if I'm 300 pounds overweight, because I have a better vehicle, I will probably win that race. The analogy that I'm drawing here is in business. Some of you and some of me, we are 10 out of 10 entrepreneurs, but we're going after a 2 out of 10 opportunity. If you guys follow Alex Hormozy, this was his big epiphany. He's like, man, I'm a 10 out of 10 entrepreneur, but I'm doing gyms. I'm doing gym launch. Such a small opportunity. For example, I'll do another example. Some of you, like if you wanted to be a chef, like the best chef in the state, right? You get incredible. You work for 30 years at this game of becoming a great chef. You're capped at some level of income. Just because that vehicle of being a chef, you can only do so much with one restaurant. But if you put that same level of effort and you were just average in a better vehicle, let's just say real estate, doing commercial real estate, I would venture to say, even if you were average at commercial real estate, you would probably make more money than a chef that's been doing this for 30 years. Now, again, every situation can be a little different, but think about the analogy of the vehicle you are in. Does that make sense? There's certain business models and vehicles that even if you're the best, the margins are so thin, it is hard to make money. Is this making sense? Give me a yes in the chat. That's making a little bit of sense. Okay. So that's what I'm talking about with vehicles. Funds, I believe, are the greatest vehicle on earth to create wealth. And if you look at the Forbes 100 list, proof is in the pudding. I'll give you a few examples. Ken Griffin, I wish I had his slide up. I don't, I'll just draw it out. But Ken Griffin is a hedge fund manager. He manages Citadel, one of the most successful hedge funds of all time. Last year, Ken Griffin, now, like net worth, right? Like net worth goes up and down based on the value of the asset. So like, for example, like Elon Musk, at one point, richest man in the world, I think he's close, second or third right now. But his net worth, Tesla's stock goes up, his net worth goes up. If Tesla's stock goes down, his net worth goes down. I'm not talking about net worth here with Ken Griffin, okay? Not net worth. Ken Griffin last year took home from his fund roughly $4.2 billion from one income source. That's not his net worth. That's not other investments. That is literally his fund paid Ken Griffin $4.2 billion in 1 year. That is $1 billion a quarter he is making from his fund. Ken Griffin bid on the original copy of the Constitution. You guys remember, this is like 2 years ago. There was all these bids and it was getting bid up. One of the original copies of the US Constitution, it was like 20 million, and then it was 30 million. I think he ended up paying, don't quote me on this, but I think it was around $45 million. There was all these news articles. Man, Ken Griffin overpaid. This guy doesn't know how to manage money. So expensive, blah, blah, blah. Okay. Well, Ken Griffin made $45 million working pretty much Monday to Thursday of this week. He made $45 million. So I think he can afford it. Like, it's incredible how much wealth is created in this. Ken Griffin is right now building the largest house ever built. And it's in West Palm Beach. He bought roughly $200 million of homes on West Palm Beach and demolished them. He's building a $1 billion property right now. Anyways, I digress. Ken Griffin, what is made in funds is just insane. How much money can be made running investment funds. So hopefully I'm convincing you a little bit on the vehicle of funds. Okay, this is a game you want to understand. This is a game you want to figure out. And even if you're like, Bridger, I don't even know, I run a business right now. One day you might want to sell to a fund. You might want to exit to a fund. So Bridger, what even is a fund? Let's just start basic. What is a fund? And how do they work? What's the difference between a hedge fund or a private equity fund or a real estate fund or a debt fund? Like, what do those things even mean? Okay, let's talk about all these. And like, let's get some definitions clear, okay? Hey, by the way, we're at the 3-day Launcher Fund Challenge. We might as well define what a fund is, okay? A fund, I'm going to use a broad sense of a fund here for a second. All a fund is, in my vernacular, all a fund is a pool of money. Investors are putting their money in. These are investors over here. People like me and you, I'm going to call us managers or fund managers. We're going to draw from that pool. We're going to go make investments. And whenever those investments make money, I'm going to use green, the money flows back to the pool and gets split. Gets split between the investors and the fund manager. That's it. It's not, I'm being serious. That's not that complex. This is like one of the oldest business models in the world. It's like, hey, let's go open a blacksmith shop. You know, I need some money. Whenever we make some money, we'll just split the returns. Like, this is what is going on. So then, Bridger, what's the difference then between a hedge fund and a private equity fund, a real estate fund, a debt fund? Like, what do all these terms mean? The difference is what they invest into. That's the difference. They're actually, we've launched 210 funds last 2 years. I've seen the back end of every single type of these funds. I've ran 4 funds myself. I know how they run. They all are structured pretty much the same, which is kind of crazy. Well, actually, we're going to dive into this framework in a second of how they're structured, but I wanted to just draw this out for you. So a hedge fund, what is a hedge fund then? A hedge fund is a pool of money. They invest into public securities. So I'm going to zoom in for a second. Stocks, bonds, crypto, anything public. That's a hedge fund. Okay. What's a real estate fund then? It's the same exact thing. It's a pool of money. They invest though into real estate. That's all it is. Okay. What's a private equity fund? Well, a private equity fund is a pool of money. Instead of investing into public companies or real estate, they invest into private equity or private companies. That's it. So for example, there's anybody know Sycamore Partners on Wall Street? Sycamore Partners manages roughly, I think, 11 billion. Maybe you never heard of them. Sycamore Partners. They own Staples department store. They own Nine West shoes. They own Aeropostale. 2 years ago, they were trying to buy Victoria's Secret. That's a private equity firm. When we talked earlier about all these companies that own each other, they're usually done through private equity. There's also micro private equity. A lot of our groups are like, hey, I have a restaurant. I want to buy up my competitors. Cool. That would be a private equity fund. We're going to go buy up all your competitors. We have people that run like dental shops. Hey, I want to buy up my neighboring businesses or expand into other states. They can use a private equity fund to do that. A debt fund. What does a debt fund do? It issues debts or loans, issue loans. They add mortgages. What's a venture capital fund? A venture capital fund is, again, a pool of money. They invest into early stage companies. That's all it is. Okay. This is all we're talking about here. It's pretty simple. So this is making sense. Give me like a yes in the chat if that's making sense. Yeah. Okay. So that's all we're talking about with a fund. So let me go a little more advanced here. So when I go down here, Where are we at? So on this framework then, so how does this look? And actually, I'm gonna do this for a second. You can make me full screen. So when I go back to here, ta-da. So when you talk about, let me go back a second. Ta-da. So if you are in anybody, so actually type in the chat which one you identify with. Anybody investing in their first business, or a day trader, incubator fund, or investing in a startup, or a private money lender, or buying one property. This would be the beginnings or the syndication. And then later on, a fund would just do that at scale. That's all a fund is. It just scales what you're doing. So instead of buying one business, a private equity fund is going to buy 20 businesses. Instead of being just day trading your own money, you're going to launch a hedge fund and day trade millions of dollars of other people's money. Okay. If you're going to invest in a startup with your own money or small syndication, a venture capital fund is going to invest into 20 to 30 initial startups. Is that making sense? Okay. So, and actually let's go back here. This will help make sense too. So, ta-da, here he goes. So let's use an example of flipping a house. Anybody house flippers in here? This is going to summarize your job in about 10 seconds. All right, here we go. So my house flippers. Okay, so you got a house here. You get hard money, investor money, bank money, your own money. You then put it into an LLC. You go flip the house and you make some money. Not too bad, right? They do a good job. That's a house flippers. That's what you do, right? Okay, I would call this a syndication loop. You syndicate capital on a deal by deal basis. So you're finding a house, you're raising money from hard money, investor money, bank money, your own money. You have one LLC and you go flip a house. So I'll tell you a quick story. We had a guy in our group. He was flipping about 4 houses a year, making good money. Each house flip, he'd make like $40,000 to $50,000, which is good money. He's making 200 grand a year. He then came to us and said, hey, I want to do a fund. I want to scale. And I go, okay, what if we built a fund? And so we built him a fund. The next year, instead of flipping 4 houses, he flipped 72 homes the next year. 72 homes. Pretty significant. And my real estate people, actually in the chat, type this in the chat for me. If you're a real estate person, if you had a fund, do you think you would get do you think if you're bidding on deals, you'd win more or less deals? If you had a fund, so a pool of money ready to go to get, do you think you win more or less? Probably more, right? Okay, my real estate people, if you had a fund, do you think if you're working with a bank and you're a repeat client, do you think you'd get better or worse interest rates? Better or worse interest rates? Probably better, right? Do you think you would close faster or slower on a property? Probably faster, right? Because the money's already pooled together, ready to go. So as a syndicator, let me share my screen again. And nothing wrong with syndications. Syndications are great. It's a great way to build a track record. But when you have a fund, you can close faster. You're a repeat client from banks. So you get better interest rates. And you typically can find more deals. Additionally, you can do bigger deals because you have more money ready to go. Isn't that interesting? It's funny, I was speaking at an event in front of, 300 real estate investors. This is like last year. And I said all this, and I said, how many of you and me, you've bid on a house and someone beat you out on the bid, and then you turn to your buddy and you say, they overpaid for that thing. They're idiots. They're going to lose their shorts on that deal. They way overpaid. Anybody want to admit? Type a 1 in the chat if that's you. I've done this before. Somebody else bids on a chat and you're like, yo, those guys they're going to lose, and maybe they are going to lose their shorts, or maybe they're not playing the same game that me and you are playing. Maybe they're running a fund and you and me couldn't bid on it because we were doing a syndication and our interest rates are higher, but they have a fund, they have a lower cost of capital. Additionally, they're flipping 30 houses, and so their average cost per house flip goes down because they can use the same paint guy and the same carpet guy and the same renovator, and they have an average cost per house goes down. Do you see how that works? Additionally, maybe they are buying up $100 million of single family homes, and they're going to sell it and flip it for $120 million to somebody else. They're not playing the same game that me and you were playing. And the whole crowd, I was speaking in front, and they're like, oh, shoot. And I was like, interesting. This is how you scale. This is the bigger game. This is why most people that are in the investing space one day have a goal and a dream of launching a fund, because of how lucrative it is and how scalable it is to run a fund. Now, I'm going to say this again. we help people do all of this, all the above. So I help people like test out their idea by themselves with their own money. I help people set up syndications and build their track record with syndicate. I think it's a great way to build a track record. And then we help people launch funds. We help people in all 3 stages. So it doesn't matter where you're at, but I'm just kind of giving the roadmap of how this game works. So again, if you're back to here, like let's say you're going to buy your first business with your own money. Okay, great. And then you want to buy another business, but you're going to use other people's money. You're going to syndicate capital together. Okay, awesome. And then third is like, hey, we want to go buy 20 businesses. We're going to launch a private equity fund to go buy those businesses. That would be the examples of the 3 different tiers of what you would do with launching your fund. Is that making sense? Okay, let's pause for a second. Is that making sense? Yeah, feeling good? You guys still alive in there? You guys liking it? By the way, in the chat, we're going to just delete comments. We might kick people out. If you're spamming the chat with links and stuff, don't do that. We're going to keep the chat here with me. But give me a little breath in the chat. Give me a yes in the chat. All right, we feeling all right? You guys good to keep going? All right, I like it. So has this been useful so far, by the way? Hopefully this gives you some ideas of kind of where we're going. If you want to go back to my iPad here. So again, the fund launch formula, over the next 3 days, we are going to step through each one of these different things. We're going to talk about vetting and structuring a deal. We're going to talk about your frame. We're going to talk about raising capital and doing legal. Now, it's a lot of stuff to cover. This is like, we actually have a course, 200 plus videos that go through all of this. Okay. I'm trying to squeeze as much as I can over 3 days. Okay. But we have our academy course, like goes into all this in depth. And we're going to try to do all this. Now, my VIP people too, we're going to do Q&As after and stuff. We'll have Q&A calls. We'll dive into all this as well with your specific funds. Okay. What I want to do for a second is I want to shift gears. So go back to full screen. A couple things that I want to talk about. So, I want to reiterate this. I know we are all talking about making money here and all the cool stuff, and we're going to talk about a lot of that over the next couple of days. Our ultimate goal for you guys, I'm going to share my screen, is that you launch a fund and get this award on stage. This is our $10 million Wall Street Rebel Award. You can see the picture there. When you hit $10 million, this is our award. It's a custom one-of-one pair of shoes you get with your name on and everything when you hit that mark. I love this quote. Again, back to our mission. If you truly believe that what you have is useful and valuable to your clients, then you have a moral obligation to try and serve them in every way possible. I believe people on this call, you have incredible ideas, useful and valuable things to your investors and to the world. What we are doing matters a lot right now. And I believe me and you have a moral obligation. It's not just for you by yourself. You have kids, grandkids, cousins, aunts, uncles, me. Like, we have a moral obligation to produce incredible businesses that will go and shape the world. Guess what? The government's not going to do it. The big firm, they're not going to do it. It comes down to me and you to go and shape and make this world a better place. Okay. I love this from Winston Churchill too. To each there comes in their lifetime a special moment when they are figuratively tapped on the shoulder and offered the chance to do a very special thing. What a tragedy if that moment finds them unprepared for that which could have been their finest hour. I'm hoping to tap you on the shoulder over the next 3 days to wake you up to the sense of you need to dive in to this world of funds. You need to, and again, your current idea may or may not work, but I want you to take on the identity. Like, I don't care if it takes me 1 month or 1 year or 20 years. I'm going to figure out what this fund game is, how funds are built, and how to actually go and scale one. If there's any lifelong endeavor in the game of business, the game of business vehicles, this is the game to get into and be a part of. Okay. I want this to be the tap on the shoulder. We're going to come back to this in a second, but I want you guys to think through, why did you actually come to this challenge? What are you looking to get out of this? Maybe we'll do it right now, actually. I want you to spend 20 seconds. And and our next section, by the way, of Todd Buchholz, he's the former advisor to President Bush. He was in the White House as an economic advisor. He's going to talk about this. We actually had he just spoke at Fund Launch Live. We're going to play a clip from him for about 15 minutes of him giving his thesis on the world right now, what America's going through, all the stuff that's happening, from one of the top economic advisors in the world. He's now a professor at Harvard. So I'm going to bring him on in just a second. But before we do that, I wanted to just give you guys a second to think through this. Why did you come to this challenge? I want you to think through this as intent of as we're getting today. Why did you do this? I want you to write down this right here. Okay. So take a second, pull out a pen and paper and notepad. I want you to write what you are hoping to get out of, I put Fund Launch Live on here, this 3-day Launch Your Fund Challenge. Okay. What are you hoping to get out of this 3-day Launch Your Fund Challenge? And I want you to also write down, what are you willing to give to receive that? Put it in your personal notes. Don't put it in the chat. Put it in your personal notes here. And actually really, like, I know people can put like little cliche things here, but really think about this. Like your time is very valuable. It's the most valuable asset all of us have is our time. You've already committed some time here being here today. The next 2 days, we're going to start at the same time, same place, by the way. And I want you to think through this. What are you hoping to get out of this day and the next 2 days? And what are you willing to give to receive that? Really simple. Two questions here. What are you wanting and what are you willing to give? I'll give you 10 more seconds. Write this down quickly. Pull out a pen and paper. Like literally do this. If you're really going to give time, I believe, to have intent to be here all out, like really think through this. And if you don't have a good answer to this, just leave. Don't be on this call. Like if you don't have a good reason for being here, then leave. But I believe if you've been here this long and you're here right now, you are here with intent. You have something you're looking for and like looking to change and shape your life. So write this down. What are you hoping to get out of the next 3 days of the 3-day Launch Your Fund Challenge? And what are you willing to give to receive that? And in just a second, I'm going to bring on Todd Buchholz. He's going to share kind of his vision of what he sees America going through, like interest rates, economy, Fed, all that kind of stuff. It's a very actually cool talk he gave. Harvard professor on economics you guys get to listen to, which is, I know me and him we're pretty close, but he beats me out a little bit on the credentials, which is pretty cool. Okay. Before we go here, I love this, again, this quote. I want to share this and then we're going to go to Todd, but I believe in God. I believe I'm a God-fearing person. And I believe God has brought us together. You can believe in the universe, spirituality, whatever you think, but we've been brought together for a reason today and over the next 3 days. And I'm going to play all out. I'm going all out for you guys to be here like live with you and like give you the sauce to go all in. Okay. And I want to share with you like this is my Rolex. This is my Lamborghini. This is my biggest flex in life is right here. My family. This is what we were building. Me and my wife want to have a slew of kids. We want to build an incredible family. I believe America is built one family at a time. This is my beautiful wife. We've been married now roughly 5 years. That's Jonah, my son. He's 2.5 years old. We're building the family right now. We want to have more babies and just keep rolling. Me and my wife grew up on the same street together. We've known each other our entire lives. Most amazing woman like ever. She's incredible. We have a beautiful marriage. And this is my Rolex. This is my Lamborghini. This is my like biggest flex in life right here is being married to this beautiful woman. I have an incredible son and it's awesome. So I wanted to make sure we have intent with what we're doing. I believe in building incredible businesses that it's going to fuel my family. It's going to fuel my kids. It's going to fuel everything I want to do in life is by building an incredible business. And the opposite is true too. If you have hard financial times and stress, it stresses marriages out and kids and other things. And I grew up in a space where I want to build a business that gives me tons of time and freedom to be an incredible dad and father and husband. Like that's what I want to do. And I think if you're here today, I bet you guys are committed to the same thing. So with that, I'm going to turn the time over now to Todd. We're going to queue him up in 1 second. And then we'll come back and my VIP members, we're gonna have a call as well that we do a VIP session as well that answers questions with y'all there. So let me one more time, if you guys just joined, Todd Buchholz, former economic advisor to President Bush in the White House, Harvard professor. He was a former managing director of a Tiger Global Fund, $15 billion fund. I mean, this guy is legit. So I'm excited for y'all to hear from him. He did a great job at Fund Launch Live. So if you missed Fund Launch Live, tisk, we'll get you there next year as we throw our events. Look out for those emails, but he's incredible. So with that, I'll have my video team queue up. Let me know if the audio is not working or something. Type in the chat, but we'll queue up the video. Here we go.
I'm going to share with you in a few minutes, though, the dirty secret of the U.S. economy. Now, I had mentioned that you speak to someone on this side and someone on this side, and they'll tell you everything's terrible, it's never been good. How far back in history do you have to go to find a time when the U.S. economy was in good shape? Do you got to go to the 1990s and the Clinton years? Do you got to go to the Reagan years and the No. All you need to do was go back to February of 2020, right before COVID. February of 2020, the unemployment rate was 3.5%. Stocks had been up 33%. There was no inflation. You know, there's a concept called the misery index that was developed in the 1970s, the last time we had galloping inflation. Some economists got together, wanted to pretend they were really smart, and they said, we're going to come up with a real sophisticated equation. We're going to start with the inflation rate, and we're going to add the unemployment rate. That's the misery index. At the end of the 70s, it was about 20%. Inflation was over 10%, unemployment was high. as recently as February 20, the misery index was at an all-time low of 3.6%. Donald Trump was a shoo-in to win re-election. By the way, nothing, I promise you, nothing I say on this stage is intended to change your politics, to make you more likely to vote Republican or Democrat or be pro-Trump or pro-Biden or pro-Millard Fillmore or Abe Lincoln or John Adams. I don't care. That's not my point. My point was we don't have to scroll back decades to find a time when the economy was on a pretty good track. That's a point of optimism for me. Now, of course, we had this terrible recession because of COVID. And that is wrong. We did not have a recession because of COVID. Now, I'm deliberately speaking slower. I'm going to jump around a little bit less because I want to make a point that you're not going to hear from anybody else. And I think the point I'm going to make explains why the Federal Reserve Board and the White House under Trump and Biden misdiagnosed the economy, and explains why we are still suffering from inflation, why the Fed funds rate is still over 5%, and why Jerome Powell at the Fed can't cut interest rates very soon. A terrible misdiagnosis because we didn't have a recession. They thought we did. We had what I call the Great Cessation. It's a different, now some of you say this is stupid. I mean, he's up there on stage just playing with words, whatever you want to call it. No, there's a huge difference, and I'm going to explain it now. What is a recession? Now, some of you, many of you are old enough to have seen a recession before. You know you're in a recession because you drive past an auto dealer and you see lots of unsold cars. You drive through neighborhoods and you see for sale signs everywhere. You drive through a Whirlpool plant and you see washers and dryers on pallets and no one wants to buy them. The inventory is piling up. The foreman on the assembly line tells people, stay home. We don't need you. That's a recession. What's a cessation? We didn't go out. We stayed in our homes. We didn't want to die. Now, from a medical point of view, a cessation is far more lethal than a recession. We lost over 1 million lives in this country. But from a purely economic point of view, it is easier to recover from a cessation than from a recession. How do you recover from a recession? You got to wait till somebody buys up those cars and those homes and those washers, dryers. And then finally, the factory foreman call people up and say, hey, Joe, Mary, come back in. We're going to turn on the assembly line. To recover from a cessation, all we needed was an effective vaccine, and we got it. Now, I'm not up here to argue about the vaccine and the variants and all that, but the fact is, as the vaccines were being rolled out, people felt safe to step out of their home, and the economy bounced back much more quickly than anybody at the Federal Reserve Board and their 400 PhD economists expected. 3 critical levers when you think about the economy, and think of these for the rest of your professional lives in trying to anticipate the economy. ROT, rates, oil, and trade. Rates. The Federal Reserve Board, you recall, or some of you recall, in 2007, 2008, in the great financial crash, cut interest rates under Ben Bernanke nearly to zero, right? At the time, there are a lot of folks, a lot of economists and politicians who said, Ben Bernanke at the Fed, it's 2008, 2009, he's cut interest rates too much, it's going to lead to raging inflation. Did we have raging inflation in 2009? No. 2010? No. I defended the Fed when they kept interest rates low. I defended them in 2011 and 12 and 13 and 14. And when so many of my friends were saying the U.S. dollar was going to fritter away to nothing, I thought, it looks still strong to me. There's still no inflation. 2014, 15, 16, 17, 18, 19. COVID happens. Interest rates go even lower. And that was okay at the beginning in March of 2020 when we all thought we were going to die. But then the Fed overstayed its welcome. It kept interest rates too low because it thought we were in a recession, not a cessation. And that started igniting inflation. And now Jerome Powell, a little insight here, he's a haunted man. Jerome Powell, I used to work with him at the Treasury Department. He's haunted. He's haunted by two names. This is a little bit of the history lesson in today's talk. There are two men, prominent men, ran the Federal Reserve Board in the 70s and 80s. The guy on the left was called Arthur Burns. How many of you know the name Milton Friedman? All right, the great economist. Yet I'm so proud. When I was a graduate student, that brilliant, generous Nobel Prize winner, Milton Friedman, actually wrote a blurb for the back of my book when I was just a nobody graduate student. So Milton Friedman's teacher was a guy named Arthur Burns, that guy on the left with the pipe and the fancy dandyish hair. That was his teacher. Arthur Burns ran the Federal Reserve Board in the 1970s when inflation escaped. Jerome Powell is haunted and realized, oh my God, I might be the Arthur Burns of the 21st century. The guy who replaced Arthur Burns was a totally different character. And you know he was totally different because instead of a pipe, he smoked a cigar. Instead of having lots of hair, he had no hair. His name was Paul Volcker. He defeated inflation in the 1980s. Jerome Powell can't figure out who he is supposed to be. When COVID struck, it was perfectly fine for Jerome Powell at the Fed to pump money into the system because we were afraid every business was going to go out. So he pumped $3 trillion into the system, $20 billion of government bonds, corporate bonds, Main Street lending. But wait, there's more. You know, there used to be ads on television for something called Jinsu knives, late night. You get the Jinsu knife, call now, you also get the potato peeler. Call now and you also get the radish peeler. Call now and we'll send a little Japanese samurai to your house to do it for you. But wait, there was more. It wasn't just the Federal Reserve Board. It was Congress and the White House. Staying alive, $1,200 to every adult, $500 to every child, paycheck protection, suspending student loans. All of that could be defended in March of 2020 and April of 2020. But it went on for too darn long. And then what happens? The election comes in 2020. President Trump loses the election. He calls together his staff, my old buddy Larry Kudlow, who ran the Economic Council. He says, Larry and friends, if this Biden guy gets in here, what's the first thing he's going to do? And they said, well, Mr. President, Biden has promised to send out another $1,200 and $500. And Trump says, well, gosh, I'm not going to let him get the last word. Let's beat him to it. Let's do it now. So you see on this chart, December 27th, over Christmas, 2020, when the economy was already bouncing back strongly, when the economy didn't need more stimulus, Congress sent out another $900 billion. Then Joe Biden comes into the White House. The first thing he asks is, where am I? That's not fair. Don't laugh at that. No. I have to tell you, this is such a, you guys, I feel so privileged to be here. I do. No, because I was not aware that there was an event that was this large, that attracted such a powerful group of people working in an industry that's so important. But I am a little disappointed. I was hoping there'd be, I could drink some water of my own rather than somebody else's. I'm just taking you backstage. There's another open one here. And I guess the message is, if I want a fresh bottle, I can run and get it myself because they left me a sneaker. All right, so Joe, let's go back, serious stuff now. So Joe Biden comes in the White House. He said, what did that SOB Trump do before he left? They said, Mr. President, Donald Trump, the last thing he did was send out $900 billion. Biden says, well, I'm not going to let him get the last word. Let's double it. Thank you. Let's double it. So Biden sends out about $2 trillion, $1.9 trillion when it wasn't needed. So Trump in Congress sends out 900 unnecessarily. Biden sends out double that, 1.9 trillion unnecessarily. A little arithmetic, simple arithmetic. The total size of the economy is about 30 trillion. So if you send out an unnecessary 10% of the total size, are you shocked? Shocked to find you've got 10% inflation? Well, that's what we did, because the Fed misdiagnosed the Great Cessation, and the politicians wanted to get credit for just pumping, and now we all pay the price, literally. We pay the price every time you go into a grocery store and you see prices far higher than they should be. And I'll explain, politicians are still trying to take advantage of that. Inflation is a bad thing. Inflation breeds strikes. Even Matt Damon went on strike. I mean, for God's sakes, you know, Jason Bourne on strike. Food prices take a bigger percentage of the family budget than they have in decades.
All right, so there you go from Todd. It's people that joined late. Yeah, that was Todd at Fun Launch Live talking through kind of where he sees the economy at. And then he follows that up with, he talks through where he thinks interest rates are going. We have an election, obviously, this year. We talked about roughly half of the world's population this year has an election. So a lot of people think like the U.S., obviously the U.S. has an election in 2024, but we have an election in the UK, in Spain, France, India, Taiwan just had their election. I mean, it's literally half of the world's population has an election this year. Generally, incumbents try to stay in power, and they want to stimulate economies. They want economies to look good, markets to look good right before their election. So he went on to say, well, I wouldn't be surprised if a bunch of things come out to make markets look good going into a November election in the United States. So we will see how things look. We've already seen a lot of movements recently. Anyways, we'll see how it looks out when we get closer there. So we'll have, by the way, the next 2 days, we're going to have different speakers from outside. We're going to have Oren Klaff talk all through capital raising and a couple other speakers. Ben Hardy's going to come and speak about his concepts around 10x is easier than 2x. Very cool. He's a PhD in behavioral psychology on how we think and how we work together, which is kind of cool. So, okay, let me share this one more time. It's been a fun day so far. So we've gone through a lot. So as a review, we've talked through the fund launch formula, the 4 steps of this. We've talked through the 3 pieces of every fund. We talked through how funds are built a little bit. The fund is a pool of money. I guess we drew it up here, didn't we? I'll go up here a little bit. Talked about the difference between private equity, hedge funds, real estate funds, debt funds, all this kind of stuff. We talked about fund managers, the vehicle of running a fund. We talked about using the fund launch formula. We want to build a fund that investors are dying to have. When you follow this step in this order and do this loop right here, when you follow this loop and don't do legal until you are sure that you've built a fund that investors are dying to have, that ensures that you build an incredible fund. Yeah, you might waste a little bit of time, but you're going to do that anyways. You don't waste any money on this legal side of things. This is what we walk people through this process in Fund Launch of how to do this. So let's see. We talked through all sorts of fun stuff. We talked about syndications versus funds and building it out. Now, tomorrow, we're going to dive into this even more. I want to talk a lot of frameworks tomorrow. We're going to talk about all these different frameworks here, talking about capital raising, legal, all the fun stuff here, and we're going to keep going. So how this will work, VIP members, we're going to do a private Q&A and a VIP call here in just a little bit. So look out for an email from us. And then we will see you all tomorrow, same time, same place. Come with intent. You all are amazing. It's going to be a great time tomorrow. Thanks for hopping on today. My hair's getting a little crazy, man. We've been on here for too long. I got to get that figured out. So y'all are amazing. Thank you so much. And we will see you tomorrow. Last thing I'm going to say, in the Discord and our channels, type in, we want to be networking offline. So meet one another. A lot of you guys are networking in the chat. Go to Discord. Our VIP members, you guys are in Discord as well. And our other groups, we have different channels that you guys can talk in. Go meet people, talk there. We'll leave this open for a few minutes. We'll keep the chat live. If you have questions for my team or if you won something, we'll leave this open. You guys can meet one another. Give a huge type thanks in the chat for my team. They've done an incredible job. We'll be back tomorrow to talk through all these frameworks, more on building your specific fund. And good job today, you guys. We got Danielle's on my team. We got Adam on my team. They'll have Fund Launch next to their name, so you guys can make sure they're on the team. If you want to join the VIP call, you're welcome to join there. And then invite a friend for tomorrow's call. Should be fun. All right, thank you all. We'll see you tomorrow. Bye-bye.
decided just to rewrite history, cause I'm in the mood to label us the leaders of the new school. This ain't for the radio, can't find this on YouTube. This the type of killing that these critics ain't used to. Victorious. In this day and age, I got time for innovation, time to be creative, time too big to waste on my time on critics hating. Flattered by your opinions to show you I'll just embrace it. Now watch a early sunrise up, no daylight savings, go nuts when I have to. Glaze bet my sound in this beats on the house that we dreaming. Watch me way back up in the castle, my thoughts are distorted. Cause I recall guys were hating uncommonly, all of them became common denominators. Hold up, try to overlook a rival. All eyes on me cause I got no competition. Now looking at an idol. Your dough ain't long enough to pay for my attention. Man, it's the gospel for the black sheep. I guess it got a banging ring to it. Quiet with triumph on the rap league. So all of you mother could sing to it. I was born to be victorious. Most definitely victorious. I'm destined to be victorious. Through all I hate to display, we remain warriors. I was born to be victorious. Most definitely victorious. I'm destined to be victorious. Avoided by the statistics, occasionally we'll quit it. Pay reality visits, but it was too hard to live it. Built on my confidence and delivered. Now I be burning these critics, cause they ain't know they was walking the course while burning they bridges. Hold up. Man, whoever thought I'd be rapping? The family ain't never think that can happen. Matter of fact, only person that ever pushed me to get out was my mother, and the only reason was cause sucking tracks. Heard that Karma's the chick that you put a ring on. And by the looks at your life, guess she's a Klingon. It's on me. Dudes had they lead on the board, but games change over time, so I even the score. Youngest bet it up, learn how to step it up. Recipe chefed it up, set it up, said it ain't wrapped enough. Giving the rest to us, going north. So of course, maybe we're shown to throwing it off. Treating it like it's
Without a doubt, the number one value to Black Card has been the caliber of people.
If you have the drive and ambition to launch a fund, then there's no excuses once you join Black Card. Well, otherwise, you're going to be figuring it out. Even with Bridger's YouTube content, it's not going to, get every little piece, put together.
And the ability to just learn, like the knowledge, and it's an abundance mindset versus a scarcity mindset. And I think that is such a huge thing for anybody looking to start a business.
The best thing is the quality of the people that are in the group, right?
And that God loves you, and I wish nothing but success and happiness for all you guys.
And they have coaches in place to help you with that too, and to change your perspective around things. It's very, the incentives to be in it they far outweigh what you pay out.
So the caliber of the people here has been the biggest value for this mastermind fund. The quality of the coaches, my gosh.
The ability that being around the people here, it gives you a push and a drive to step up more.
Then I'd be Superman. If I fly around the world, it wouldn't take me longer than it would to be your man. I fight 1,000 guys, live to die 1,000 lives. Oh, I find another way to make me smarter, just so I could understand. Just so I could understand what it takes to be your man. Take the clothes right off my back, put the knife against my throat. Say you leave and won't come back, but I'll find a way to forgive you. Cut the strings off my guitar, stomp your heels into my toes, steal the keys right out my car, and I'll find a way to forgive you. I fight 1,000 guys, live to die 1,000 lives. Oh, I find another way to make me smarter, just so I could understand what you're looking for. Just so I could understand what it takes to be your man. What it takes to be your man.